here. Good morning, everybody. Happy Thursday. I had to think for a second. Welcome to the morning show here on Stock Market TV. Spencer, Steve, JC, Alfonso, the full crew with you this morning. Gosh, a lot to get to. Okay, bit of an earnings bloodbath. Not entirely, but I mean, when they punish you, they punish you. I'm looking at you, Salesforce, Nutanix, basically everyone, it seems like, except for Foot Locker, right? It's down this morning. Yeah, just some big losers, big movers today. So we'll talk about that. Oh yeah, Kohl's, UiPath, forget about it. Chris Verrone is the guest. He'll be on at 9 o'clock. We'll have Sean McLaughlin on to talk options at 9:30. And that's what I got. Good morning, chat. Per Dawson, Phil, G, Working Man, Peter, Josh, and others. How y'all doing today? Let's get the show on the road, shall we? I think we shall.
All right. Good morning. I'm going to the beach today. So.
No big deal.
Summertime over here, Strazza. Strazza doesn't know anything about that because it's summertime there all the time. It's just, is it hot or is it too hot? That's really the question down there, right? Strazza, is that about right?
That sounds nice. Summertime in the Northeast. I'm jealous.
Best tan in the All-Star Charge team. Steve Strazza, definitely not Spencer Israel.
I mean, Brett Schaffer's got a great tan too.
This is fair. He's behind the scenes though.
He does.
He's the one that makes the magic happen, right?
That's right.
We got some things to talk about. Mr. Spencer, why don't you hit that bumper and let's rock and roll. All right, let's do a quick little morning rundown. You got the Dow futures getting the shit kicked out of them today, down 300 points this morning in the pre-market. S&P futures down 25 basis points, down to 52.70 for S&Ps. Dow flirting with breaking back below 38,000 as it was just approaching 40,000, just like a hot second ago. NASDAQ 100 futures down as well, less than the others, down 17 bips, about 30 points on the NASDAQ futures. Bond futures, 30-year futures actually up, believe it or not. How about that? Way to mix one in, boys. 30-year futures up about 60 basis points. That's a big move. Hanging out above 115 for 30-year bonds. Crude oil, $79. Pretty much flat on the day. Copper down 3% today, down to 465. Gold futures are flat, hanging around near 2365. Silver futures down 2.5%, 3150 with the volatility index back above 14. Of course, over in the funny money, we've got BTC this morning, pretty much flat, about up 450 points this morning. All right, 68,000 for the BTC. Then you've got the Ethereum hanging out right at 3750 for Ethereum, pretty much flat on the day. And
Jason.
Solana is pretty much flat on the day today, 166 for Solana. And then, of course, total crypto market cap, Spencer Israel. Why isn't this not working?
Sorry.
Why isn't this not working?
We got to stop sharing.
Total crypto market cap, believe it or not, is hanging around 2.4 trillion in market capitalization. 2.43.
JC, do you remember when we laughed that the bond market was more volatile than the crypto market last year? Is that happening again, or is it me?
Not quite volatile in the bond market.
Bigger sticks in TLT these days than Bitcoin.
Yeah. They're both not much is happening in either one. How about
boring?
that?
It's boring out here in crypto land.
Boring out here in crypto land, not in software land. Software land, getting the crap kicked out of it. Why don't you throw up slide 2 here? So this is what Strazza considers the world's most important industry group, right? Is that right? Did I quote you correctly? I don't want to
Oh,
misquote.
you never get it right.
I never get it right. Sorry. What was it?
Most important, we do the semis, the chips, right? The best stocks, best businesses in the world, software.
The best stock. Sorry. Okay. So the best stocks, according to Steve Strazza,
Best stocks.
quite the divergence here. So you got the NASDAQ 100, of course, and then you've got former leadership groups in software not doing what the NASDAQ is doing, actually the opposite. While the NASDAQ is making higher highs, higher lows, the software index is putting in lower highs and potentially even breaking down to a lower low today with its second largest component, Salesforce,
Yeah.
not doing too hot. Spencer, what happened?
Well, what happened was Salesforce reported earnings last night. Their sales actually missed. They missed on the top line, 9.13 billion versus a 9.14 billion dollar estimate. Now, if you're thinking, who really cares, right? They missed their estimate by 0.01 billion dollars, right? Well, I was curious. You have to go back to Q1 of 2013 to see the last time Salesforce came in below the street estimate on the top line number. So it's been a minute. This company is
If that's true, though, then the street's just not doing a good job. How do you
or
beat consistently for 10 straight years?
or Salesforce is doing a good job.
I mean,
Either way.
Yeah, like Nvidia. Is it Nvidia that's doing well, or is it that Wall Street can't keep up and they're doing a crappy
Right.
job?
I mean, you shouldn't beat 10 straight years. What is that?
Well,
These are the stocks we're trying to catch on the beat report.
Yeah. So anyway, they missed it. They actually raised their guidance for the fiscal year, but I think the miss was so shocking. That's why we're down 13% this morning or whatever in Salesforce, 16%. I don't know.
Well, I mean, you said it, Spencer. Bad earnings, stocks are getting hit, right? And you're seeing a lot of it this morning, but all earnings season, really. The good reports are getting rewarded. Bad ones getting knocked down.
can you throw up?
Okay.
I mean, there's no reason to own Salesforce anyway. Stuck below overhead supply.
Totally agree.
So anybody who's in it deserves what they're getting. So I don't feel bad for anybody.
You
Can
never
you throw up
go on
slide
this-
4?
You never really got the breakout here at all, JC. Stuffed at overhead supply.
Yeah.
And IGV as well.
If
Surprisingly.
you're in this CRM, I mean, there's really no reason to be in it. So I mean, the fact that it's down a bunch should be down more. I hope it goes to 0. Look at the performance of Salesforce and ExxonMobil since the folks over at Dow Jones, in their infinite wisdom, decided to kick out ExxonMobil from the Dow Jones Industrial Average, which had been in there for like 93 years back when it was Standard Oil and then all the mergers. So ExxonMobil was originally part of that Standard Oil, had been in there for over 90 years. They decided in their infinite wisdom back in August of 2020 to kick out ExxonMobil to add another technology stock because there wasn't enough technology apparently and too much energy, according to the folks over at Dow Jones. Here are the returns since then, Mr. Strazza. Is this surprising to you at all?
No, I'm well aware of this one, as you know, and it's even better than this too, because if you were to zoom out, it's the opposite coming into the change up. So Salesforce was always the far better performer than Exxon for years and years leading up to this decision to put them in, take Exxon out. It's like as soon as they did it, it was Exxon. So it's just funny how that works. And that's the case with a couple of the other decisions that they made in recent years also. Was it Amgen? Amgen and what did they boot? I forget. We'll have to go back and look. Who did they boot for Amgen? Do you remember?
I think it was another healthcare stock.
Walgreens?
No, this is before that. They booted out another healthcare stock.
Yeah, I forget which one. Anyway.
And then also, I just want to point out, since that happened, energy is up 200% since they kicked ExxonMobil out. The energy sector is up 200%, while technology is only up 100%. But energy more than doubled the returns of the next best sector, which happened to be technology.
This happened in what, like November of 2020?
August.
Oh.
Who is the worst performing sector since August of 2020?
Real estate.
Too easy. Who is the second worst performing sector since August of 2020?
Cables?
Utilities.
Nope.
Healthcare.
Nope.
Well, all right. Those are the obvious ones.
What the hell is it?
Consumer discretionary, my friends, has
Really?
been the second worst performer other than real estate since August of 2020.
Are you sure?
Oh, I'm sure.
That doesn't
Oh,
sound
I'm sure.
right.
Total return, too.
That's no good.
No good for who?
Consumer discretionary.
Well, we've already established that consumer discretionary on a relative basis is making new 10-year lows. And on an equally weighted basis, also making new 52-week lows. So it's not like this Amazon Tesla thing. It's consumer discretionary. It just sucks.
Spencer, you want to walk through the other crap earnings reports?
Oh yeah. Do we have the path chart? We have the path chart laying around here somewhere. I think we do. Earnings are fine. Guidance was not good. They missed badly on their Q2 revenue guide.
Oh my God.
And actually they missed on their full year guide. And their CEO is resigning, and their founder is going back into the saddle as CEO once more.
Like the only thing like not happening here is that nobody's going to jail yet. Like everything that could go wrong is going wrong, except like nobody's in prison, but like everything else is. You know, and again, if you own this, like I don't feel bad for you. Like you deserve everything you have coming. Why would you own this?
You're right, JC. This looked like a nice base when we were above 22. It formed a short-term top. You see it break down there, right? Long before it breaks this trend line that we have drawn in blue. You're back in the box. At that point, you should be out of this name. We were in it and out of it.
Colin, I'm not cherry picking anything since June of 2020. The changes in the Dow were in August of 2020. So I'm not cherry picking. I'm just.
Although it is a bit of a coincidence that April 2020 was that absolute bottom.
No, it's not a coincidence. That's part of the reason they probably kicked out ExxonMobil because crude oil traded below zero. Yeah, I'm not cherry picking, Colin. This is just when the Dow Jones Industrial Average made their changes. So I'm just anchoring to that point. No cherry picking. Facts only.
Wait, Kathy Wood didn't just buy UiPath last week, guys. She's been in this one for a long time.
Who cares?
Well, maybe she may have been adding.
Who cares? But I mean, this poor woman.
But first of all, she's not poor. First of all, she's not poor. Second of all, who cares what she's doing? She has lost more money for investors than any other fund manager in world history.
I don't know if that's true. I don't know.
Oh, no, it's a fact.
Fair to say.
Oh, it's a fact. Has destroyed more wealth than any other portfolio manager in human history.
Well, that's due to size, right?
Just facts only.
She had.
The question is, why does it matter what she's doing? Who cares?
I agree. No, I agree. Fine.
Let's say she hadn't been the worst performing fund manager in human history. Let's say she was actually making people money. It still wouldn't matter.
You know, yeah, well, I'm done. Yeah, I got nothing on this topic. Yes, she makes money off management fees. That's just the way the business works. She's an asset manager.
Yeah. But there's no reason to be in this one, right? Nope. Obviously.
You shouldn't have been in it. You shouldn't have been in it before this, and now you definitely don't want to be in it. I mean, this might be looking like a pretty good short pretty soon here.
What do you think there, Spencer? 0.0.
I mean, I suppose
0.0.
I don't think so, but that's funny anyway.
I mean,
there's support at 0.
Everyone has support at 0.
Well, not crude oil in 2020.
All right, that's fine.
Natural gas also traded
here?
below 0 a few times. It didn't get all the headlines, but it did.
More earnings.
Talk to me.
What's next? Is next chart Nutanix? Is that what we got? What's the order here? Nutanix, EPS beat, sales beat, revenue guidance light for the quarter and light for the year. And we're down 12%.
You buy this dip all day. Look at this chart. We're right there. You're retesting the breakout level. You know, maybe let it just stabilize a little bit here today. But this is great. It's great. Good report. Knocking it down a little bit, down 10%. It's a software stock. This chart looks excellent. I love this chart.
Not that it matters all that much, but right off this report last night, this thing got hammered. It's well off the lows now. Obviously, it's you know, it's come back quite a ways, but it got
hammered. Like what? I see lows of like 61.
Yeah, I see 55.
Oh, really? Okay.
But anyway, we're at 65 right now. So we've come back a ways. Do we have a Coles chart somewhere? Because this is really your disaster of the day. I guess Path is one disaster, and Coles is another.
But retailer was it Foot Locker?
Foot Locker was good.
Yeah. Also, the long dicks keeps working,
dude. The long dicks, they have the best balls deals.
Okay, we're done.
Okay.
Coles, I think we have a chart somewhere, but what a train wreck. The street was thinking maybe they would make 3 cents per share. Nope, they lost 24 cents per share last quarter. Sales missed as well. Comparable sales, these are sales at all their stores that are over a year old, down 4.4% on a year-over-year basis. They lowered their guidance for the year, the revenue, and the EPS. Just everything kitchen sink bad report for Coles.
Their stores are disgusting. Good.
I've always liked Coles. Maybe that's my problem.
Yeah.
Can you show the dicks, please? This is where Strazza gets his balls. Can you explain the 2-for-1 specials that you're getting? Seriously.
Yeah, so
I need some balls.
So they get to know you. They get to know you if you have the app, right? They know what balls you like, and they'll offer you targeted deals. Like, hey, you like the Strixon dual pane balls? Buy 2, get 1 free. Bang, bang. That's like $2 a ball. That's really
You
good.
need an app. You need an app for this. You can't just go to the store.
I would get the app.
They don't have dicks in Key West, do they?
No. So I'm doing all online orders, but I just got new Nikes from there. It's good. It's good. I'm enjoying
all-time highs, man. Something's going right there.
Yeah.
The jokes in the chat.
No shrinkage at
all. The jokes just keep on coming. They write themselves.
Too good. Oh, like children out there, like children. Anything else exciting? Because I want to get into the hot corner.
Yeah, we got some stuff. We got some stuff today, but we didn't finish earnings. Foot Locker.
Wait, did we have a Coles chart? I don't know if we did, but I just wanted to say that because it's down 24% this morning.
The sloppiest slop job you'll find. This chart.
I don't know if we do. It's okay if we don't.
We don't need
what is a Coles?
What? Cole's a person. Cole's a person, man.
I don't think that's how you spell it, though.
Coles?
Coles was a person. I thought.
Ticker symbol KSS?
Yeah.
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 This thing's a disaster.
Yeah.
Nobody shops at Coles.
I do like once a year.
What do they sell there?
Jeans.
Like a Payless?
Nah, it's a department store.
How about the long TJ Maxx short Kohl's department store pairs trade? You like them?
Costco's
a monster.
Okay, elsewhere, real fast. Foot Locker up 13% this morning. EPS beat, sales beat, reaffirmed their outlook for the year. That's actually your leader. Foot Locker and Burlington. Burlington store is up 15% this morning. Those are your 2 winners on the board. Foot Locker and Burlington. So again, we say this every quarter, right? Retail, of all the industries, retail seems like it's the biggest one where there's the haves and the have-nots every single quarter.
Yeah. It's a bifurcated group, naturally. Locker's starting to look interesting here.
Remember the other day in our meeting, I wanted to kind of get like a restaurant sort of situation so we could look for long, short pairs trades. Why don't
retail
we just
would be
that
better.
up to retail in general, like a retail
That's
restaurant?
what I feel. Yeah, like consumer brands, whether it's food or stores, like brands that we know. We're going to make a consumer universe.
But like actual like physical location places versus like a consumer product.
Places you can go to.
Places where you can shop or eat.
Online
Or like get your nails did or whatever. Like places where you go get stuff.
online also or no?
No.
No.
That's another animal.
You know, the boys are busy. Big to-do list coming back from the
Yeah, but I like
portfolio
this one
accelerator.
because for the point that Spencer just made, you've got your haves and you've got your have-nots.
Yeah,
And
I
that's very much the case in this industry versus others.
Yeah, I mean, listen, there are others like biotech. You're always going to have it, but this is a big one. I love it. I think it's a great long short universe.
All right, so let's put that together and so that we could focus on pairs, on specific pair trades. I like that.
Yep. Chat's talking about Birkenstock, which is up 10% on their report. Birkenstock is a $10 billion company. But it's worth 4 Foot Lockers.
Birkenstock is the oldest company that is publicly traded.
That's true.
Isn't that hilarious? It's older than this country.
I think that's so ridiculous.
And yeah,
Cool?
talking about Abercrombie and Fitch. There's a couple good Abercrombie and Fitch charts in the chart report this morning or last night. Because A&F is just bonkers.
Teeny bopper charts?
Yep.
Birkenstock was founded in 1774, 2 years before this country was founded.
Speaking of teeny boppers, American Eagle down 10%. Like we said, haves and have-nots.
Yeah, but strange, right? Like, wouldn't you think Abercrombie and Fitch, American Eagle, what's the third one? The Hollister, the Aeropostale.
No. What's the other one?
Aeropostale.
What happened to Aeropostale? Are they still public?
They were.
Spencer still wears his Aeropostale shirts.
No,
I don't.
So I also probably don't know how to spell that. But wouldn't they all move together? Like, how is Abercrombie and Fitch crushing it?
These are different companies. They all just make shitty old clothing.
It's the same.
They're different companies.
It's the same clothes. One's doing
shitty and old. You pay extra for them to look older.
You know, we made a denim custom index because some of these jeans companies are just doing so well. It's not just Abercrombie.
Can we do the hot corner, please?
Take a good look at that Levi chart. Denim back. All right, yeah, let's run hot corner.
The Wolf, Pet Healthcare.
It's up big this morning because that is not a piker purchase.
That is not a piker purchase. Cameron Breitner.
Yeah. Big squeezer.
So hot right now.
All right, so this is the hot corner. These are the most important filings from the prior day. We should probably explain to people. I know we've got some new viewers. What is the hot corner? These are the most important transactions that took place in the prior day. These are big institutional filings. These are corporate insiders. The one that stands out to me is Mr. Cameron Breitner.
Yep.
This particular gentleman here is a private equity bro.
38% short interest, JC.
Wow.
So this is Petco. Many of you are familiar. Speaking of brick and mortar stores.
Great ticker symbol.
And winners and losers, right? I don't know if they also own PetSmart. I forget, but it's Petco. These pet stocks are not just working over the very short term, but a lot of them are squeezing, right? So Woof is a good example. We talked plenty about Chewy yesterday. Trupanion, TRUP. It's like pet insurance. That's got a really sweet base shaping up. All of these names are really squeezy, and you're seeing it this morning with Woof up 13% pre-market on the heels of this filing. That's why the stock's up. So I think you're going to get a squeezer here today, and price is running right up into its 200-day moving average. The trend is slowly reversing here with just the strength from, I don't know, the past month in this one.
Over a 30% short interest. Interesting.
So I'm seeing average volume about 5 million and about 30 million shares short. So 6 days to cover too, almost 6 days to cover. Yeah. I like it. I think you play it off the pivot highs here too.
What about the Hilton? Melanie Healy dropping 400 grand, buying some Hilton. You don't think she's chasing a little up here?
They've, Hilton, Marriott, Hyatt. It's not uncommon for the executives to come out and buy these stocks. These guys have been on our list for a long time now in the hot corner universe, and HLT still looks great. You look at that chart, it looks like that's probably going to be a failed top. That looks failed toppy to me. I don't know if we have that one. Sunoco is another one looking failed toppy. This is Sunoco LP, the refiner. They pay a nice dividend.
SUN.
Yeah, big level there at 60.
Yeah.
So-
All right, Sunoco, I see you. That's building a nice little base. I'll buy that breakout.
If it gets there.
Yeah, if it gets there. And if not, that's okay too.
Uh-oh. Coyotes. JC doesn't like it when we talk about the Coyotes.
Tell me more about the Coyotes. Is he buying? What?
No, the Coyotes is short Trupanion.
It's short Trupanion.
Yeah,
Yeah.
And that's the pet insurance, right?
yeah. It's such a junky stock, but boy, squeeze potential for sure.
I
like
guess
the
he's
whole-
short now. Yeah,
I like
this
the whole
thing is-
pet theme. I like all of it.
How many cats do you have?
Only two.
I don't know.
You have 2 cats?
Yeah.
Yeah, I don't know if people out there know that
I had 1.
Strazza is a cat lady.
It's terrible. My other cat feels like I don't love her sometimes.
All this time, I thought you had 1 cat. There's 2 of them.
One of them's literally sitting right here, right now, in front of me on my desk. She doesn't leave my side, and the other one, I don't know where she is all day. So, Lola gets all the airtime.
Well, make this your reminder that the Hot Corner goes out every day. It's a free daily note. The link to get it is in the description on YouTube. Just click show more. It's right there near the top under where it says free research. Goes out every day.
Yeah.
Guys do a great job.
Dawson,
Great
I love the idea. He said, can we do a cold corner? There's actually a really good reason why we don't do that. Cool name.
Cold corner.
Cold corner.
We'll call it the cold plunge.
In Key West, everyone has cats. That's true also. And they roam the streets too with the chickens.
Hemingway's house is loaded with cats.
Yeah.
Cats everywhere. Hemingway was really much into his cats.
And they're very big cats, and they have 6 toes. Some of them look like baby tigers. It's really cool.
6 toes. That's not weird.
Yeah, look it up. It's a famous thing. Yeah,
What do you say we bring in Mr. Verrone?
We can do that.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Chris Verrone. How are you?
JC, what's up, bud? How you been?
First of all, I just need to give you the compliments and kudos that you deserve with those magazine covers back there behind you. Come on.
Pretty good, right? And then, more importantly,
Naturally, the American flag, of course. But, a lot of people have American flags up on their wall, right? But how many have a collection of magazine covers? I mean, from one nerd to another. I mean, big ups.
JC, this is the best one right there. That's Paul Volcker smoking a cigar in front of Congress in late '81. And the headline from Time Magazine is Interest Rate Anguish. But as you know, rates had already peaked.
Of course. Whenever there's a chart on the magazine cover, you buy it.
Yeah.
Right. That's the old saying, right?
Right. That's one of the old sayings. The other old saying, as we learned with the UK this year, is when they finally declare a recession, buy the stocks. I mean, talk about a breakout with force, what you saw from FTSE 100 earlier this year. And I think very viable pullback in a market that has no tech, right? What's FTSE 1? It's resources, it's banks, it's insurance.
Took the words right out of my mouth. 0% technology. Well, it's probably part of the reason why I did nothing for 20 years, right?
Yeah, fair enough.
So you see how that rotation happens, right? So speaking of which, you've got the NASDAQ making new all-time highs. not many stocks in the NASDAQ are making new all-time highs, but the NASDAQ itself is making new all-time highs. Software is not. Software was never able to make a new high. Just a few things on my mind. Dow Jones Industrial Average, new all-time highs. Transports keep making new 6-month lows. That stands out to me. Those are just a few divergences on my mind. Curious your thoughts on all that. Does it matter?
Well, listen, I think you don't have to have an opinion on everything. You have to be aware of everything. And I think it's too soon to know what all of those mean collectively. I kind of keep a running, I keep a running list of things that make me feel uncomfortable, right? And you stole my list because everything on that list is, whether it's discretionary. Listen, I don't think discretionary is awful, but it certainly has weakened.
10-year lows on a relative basis.
Yeah. Now, what's curious though, JC, like on the other side, on the small cap discretionary, there's actually some turns going on there, which I find to be interesting because there's this narrative out there that, rates are higher, so trade up in quality by the big cap discretionary. I love when the market just disagrees with the narrative. And I think the market's beginning to disagree with that narrative. I would encourage you to look at like Russell 2 discretionary relative, equal weight S&P discretionary. There's a big turn actually going on underway there. So,
yeah.
But in the spirit of what I would describe as blemishes, and we've talked about in our workers' blemishes, certainly the transports are on that list. What hasn't happened yet, none of this has translated into credit. Credit, by and large, is pretty benign. I'm sure we could find the odd chart here and there that makes you a little queasy. So I lean more towards we're in some momentum consolidation. I don't think we've seen like the broad deterioration to trends. I'm not saying that can't happen, but we've been in such a potent uptrend for 14, 15 months where I do think you want to give this a little bit of leash, particularly with some good seasonality the next 60 days. Let's see how this shakes out. I will just say candidly, probably not supposed to say this. My email inbox the last probably 24 hours from clients, you'd think the S&P is down 10 or 15. It's interesting how quick it comes, how quick the impulse of wanting to get really negative comes about. I thought it was notable yesterday that that Bitcoin did not break. Right, there was all this macro, like any macro guy in the world, like bad auctions on the twos. Bitcoin didn't really care. And that's kind of been my liquidity risk tell. So I'll watch that here. My gut says we're going to make another run at the high. I mean, we're near the highs. I think most stocks will make another run at their highs as we move into maybe call it mid-July, early August ahead of this election. I'm sure you've heard there's an election. Is
that this year?
This year. That's this year.
Got it. So it's like, what is it? Like Olympics, leap year, election? Is that how it works?
Yeah. A lot going on.
Always a lot going on.
What are you thinking?
Well, you and I, we look at the same markets. So, it's not like what I'm saying is foreign to you and vice versa. On occasion we surprise one another, but I mean, come on. I mean, you have magazine covers on your wall. I mean, we're built similar ways. I'm glad you brought up sentiment and how quick they are to turn in your anecdata with your clients today. Come past February, we're coming in pretty hot in sentiment. Newsletter writers, the most statement in years. We create like a composite of all the indicators and put them all together because each of these, sentiment readings and things like that, they all have their own flaws. None of them are perfect. And even when you aggregate them all, they're still not perfect. But it's pretty good for us. And we were pretty hot in February.
Yeah.
And they went from super bullish to and sentiment, certainly being a possible headwind to potentially even a tailwind or getting close to sentiment, maybe even being a tailwind. What did it take? It took 10% correction in large cap tech, 14% correction in small cap tech, 16% correction in regional banks. You had 8-9% correction in the NASDAQ. 5-6% corrections in the Dow and S&P. Discretionary down 8%, right? Transports, small caps down double digits. That's what it took to unwind sentiment. It wasn't much. Was what I took away from that.
Someone told me a long time ago, if you need a survey to tell you about sentiment, you're not talking to enough people.
Mm-hmm.
And listen, I have the luxury of going around the world and talking to people every week. And I have just been struck for a long time now how fragile mindsets still are. I mean, even think about where all the strategists on the street are. I'm just surprised there's no 6,000 targets. There should be one because it's not that far away.
It's not that far away.
It's also not that implausible.
Right.
Is it implausible? Now, what's plausible and what's your base case don't have to align, right? And I think really good investors, really good analysts understand they don't have to align, but you always have to entertain or imagine what could be reasonably plausible. And for something that is reasonably plausible, I think there's 42 Wall Street strategists that have year-end targets on Bloomberg. There's not one at 6,000. There should be one, right? If we're going to describe this as a 99 type NVIDIA, Cisco type environment, I'm surprised the chase among the strategists is not more feverish.
Coming into the year, they weren't all that optimistic. How much has changed from the sell side between the beginning of the year and now?
I was looking at this earlier in the week. In May, among about 40 strategists, you saw 4 upgrades in targets from like 49, 5,000 to 54, 5,500. But everything catching up, right? I'm waiting to see the leapfrog, right? One of the indicators we've looked at for a long time is when that average S&P sell side target is above where the index trades. That's actually when your forward returns begin to suffer. When that average target is either at or below, so when the strategists are playing catch up, that's when your forward returns tend to still be quite good.
And are you talking about the indexes or in the companies individually?
I'm talking the top down index level, that type of estimate. So I'm just surprised. Listen, I'm not saying we can't correct here. I'm not saying there aren't blemishes. But if 99 is going to continually be referred to in the context of NVIDIA here, then we ought to, ask the question, do other things look like 99? And I don't think we're remotely in that feverish kind of sell side strategist seeing who can have the highest target every week. That is not where we are.
Why don't we talk about, we talked about discretionaries and technology and some of these. What about some of the more natural resource based areas and, how what we've been seeing in rates impacts those things? We were just taking a look at, I know you and Todd Sohn love this sort of thing. Ever since they kicked out ExxonMobil from the Dow to bring in Salesforce, not to, kick someone when they're down, but, it's top of mind. Energy has really dominated since the Dow made that decision. ExxonMobil has obviously abused Salesforce, continuing to do so today. And when you look back in history and you look at these trends in energy and commodities, particularly on a relative basis, they don't just last a couple of years, right? They historically last for a decade or two, right? So are we going to bet that this time is different than those and this is just going to be a short recovery for energy and not the beginning of something longer? Like, you asked me what I'm thinking about. That's one of the things on my mind.
JC, do you get the feeling that this market has one foot in some old regime and one foot in some new regime, and it's not quite sure which is like the durable path forward? Because there certainly has been a persistence in a lot of the tech stuff. Well, probably software has narrowed, as you've pointed out, and there's some big misses in software. But when you look at the other side, the antithesis of tech, and you have secular breakouts in things like Freeport, Southern Copper, Antofagasta. I have a saying in meetings, the move in commodities or resources or metals is not over until people can pronounce Antofagasta, Anto LN, if you know the ticker. These are just beginning. Now, one of the crimes, and it was a fireable crime back in 99 or in 98, 99, was being too soon to the new leadership. That was a problem for a lot of people. And I want to be mindful that there's still lots of relics of the old leadership here, but there's all these hints about something new, new on the other side. My sense is these next few weeks, maybe next few months, You're going to have a kind of a shakeout moment in some of these commodity stocks and some of these resource stocks, because a lot of weak hands I feel like got on the last few weeks, probably late. If you want to sell me yours, JC, I'll take them off your hands. I think we've put in major turns in those stocks, and I don't know what the right target is over the next year, 3 years, 5 years. But what I do know is I've seen in my career time and time again, your best ideas will get to then exceed even your most optimistic targets much faster than you could ever imagine. I came into this year with like a 2250 target gold and I think a 450 target copper. And it was April something, and we blew through them. That speaks to the trend, right? Conversely, all your bad ideas, they take up all your time, they take up all your capital, and they never get to where you think they're going to go. That's just a lesson of this business. I've seen it time and time again.
When you talk about resources, you've hinted towards metals. Is it just a metals thing? Is it metals and energy thing? Is it a commodities thing?
I do think, and I'm sure you know this, if you look at some of the weekly energy charts, long-term trends, a lot of those late last year, early this year, kind of bottomed where they had to. Whether that was, 38% retracements or whether it was 200-week moving averages. I think Devon Energy is a great example of that. Look at a weekly on Devon. Maybe you guys can pull it up with a 200-week moving average. Like, it bottomed where it needed to. And you can kind of go stock by stock by stock within energy and really globally and find similar price action where it kind of, like, listen, you had this really big move off late 2020 into, early 23. Then you had this big consolidation in energy, but they held where they needed to. So I think you do have to tip your hat to them. I wouldn't call energy broadly a leadership sector at this moment, but I think at worst it's neutral. It's not meaningfully detracting from your index performance right now. But where I'm probably more excited about longer term are metals, mining. And again, in the spirit of, I don't need to have an opinion on everything, but I want to be aware of everything. Look at some of the moves in like the Hong Kong aluminum, Genji copper. These are like really, really meaningful turns that I have not seen in 15 plus years.
What about when you look at like the XLE, for example? The XLE is still below the 2008 highs, which is insane. And you and I remember those 2008 highs very well because they were the only sector, the only group still going up, right? Everything else had already been, getting killed. With a few exceptions, there were some ag stuff doing well too, but energy didn't peak until the summer of 08. We're still below those levels.
Remember, JC, transports didn't peak in the summer of 08 too. I remember being too negative too soon, and then getting complacent in summer of 08 because I was like, look, man, the transports are making new highs. Things are getting better, right? It's just funny. And actually, a couple of weeks ago, when all these truck stocks started to break down, I went back and I revisited some of my work from 07, 08 and looked back further in history. And what you see about trucks and transports, they tend to weaken early, then they rally again. And like that last rally is a massive head fake. You have seen that time and time again, that they'll give you some false signal kind of right into a top.
When you look at the New York Stock Exchange Energy Index, which includes a lot of foreign energy stocks, it looks a lot better than the U.S. energy sector, right? Yeah, and I know for a fact you guys are looking at a lot of these New York Stock Exchange indexes, not just the spiders. Can you touch on that global exposure that you're getting in some of these indexes and what that means to you from a sector perspective?
Start with the strongest energy stock in the world, PetroChina. Then go to Shell, one of the best looking charts another reason why UK probably broke out. As you know, Todd, who works with us, does all the Canada stuff, and all these Canadian energy stocks look pretty good.
Imperial.
IMO, CNQ, these coal stocks look fantastic still. We have a joke, we call EVs coal powered cars, and the coal charts reflect it. So like, this is what's interesting about this market And when you look historically, something we've seen is that these regime changes, I don't like that word as cliche, but for lack of a better phrase, like these regime shifts are like 4 to 5 year battles where you're fighting for the heart and soul of the leadership of the market. And it's messy and no one quite knows. Like 82 just didn't happen, right? 68 just didn't happen. 1952 just didn't happen. They were preceded by 4 or 5 year struggles for where the leadership ultimately would go. So I think we're seeing a market that is 1 foot in some old leadership regime, 1 foot in some new one. And I want to be open to the idea that this new one is more than just, it's a trade in copper or it's a trade in commodity. This might be more, and it might be more for a long time. At a minimum, at an absolute minimum, commodities should be ranked higher than bonds on whatever asset allocation hierarchy that you have. Like, that's the bare minimum. Whether they're going to be ranked higher than tech-driven equities at some point in the future, we'll see. But they better be ranked above bonds in kind of where you see the asset allocation breakdown.
Yeah, no, I mean it's something I've been thinking a lot about is thinking equities first, right? And then thinking about equity alternatives, right? As opposed to kind of thinking about all asset classes. You got stocks and you got bonds and you got commodities, rather than thinking them equally, thinking equity first and then thinking what are the alternatives. And to your point, you're saying of those alternatives, commodities over bonds, right? I think that makes a lot of sense. In terms of having 1 foot in an old regime and 1 foot in a new regime, doesn't this come back to interest rates and bonds and how a lot of these correlations that you and I have been accustomed to for so many years, decades even, have changed a lot over the last few years? Things like a copper gold ratio
or dollar oil
or dollar, right? Or dollar. I mean, there's a lot of things that have changed. And I'm asking you if you think this comes back to the bond market and some changes in the dynamics there from perhaps a more deflationary regime to an inflationary regime. And that's what shifted these correlations, to your point, energy and the dollar, right?
So,
commodities and the dollar.
I had this debate. I spent a lot of time on airplanes. And as you know, the Wi-Fi sucks on airplanes, right? So you spend a lot of time just thinking, right? And I enjoy that time because I think sometimes we all spend too much time trading or too much time doing. There's usually time to think, right? Like 70% of your time should be spent thinking. And one of the things I've been thinking about recently in my head to myself is, what is worse, a sample that's too small or the wrong sample, right? So there's a tendency, I want to have the biggest possible sample. I want the most data to backtest this or backtest that to yield some conclusion, whether it's correlation, stocks and bonds, or what sectors work in different regimes. But what if by moving towards the largest sample, we're forgetting that maybe a more narrowly focused sample is a better reflection of the environment that you're presently in? And I think that relates right now to how we want to think about bonds, right? Because most of what you and I have done in our careers has been in an environment with bond yields falling. Most of what we know about what's defensive, what's offensive, what intermarket correlations we should expect at different moments are based on the regime of falling rates. So if that regime has secularly changed, now cyclically we can talk about it in a minute, whether it's yields up or down here, but if that regime has secularly changed, don't I want to narrow my sample in terms, maybe 52 to 77 is a better sample than 77 to 2020. And what can we learn about what's defensive in that period versus what's defensive in later periods? And one thing I found interesting, I don't love the 1970s comp, but one thing that was true from 68 through late 70s, utilities were never defensive, staples were never defensive. You'd get these 4, 5, 6 month head fakes, and then you want to sell them. Even in the recessionary periods, you really weren't paid to stay there very long. So what's worse, the wrong sample or a sample that's too small? I wonder if looking at the wrong sample is actually worse. Cyclically on bond yields, I'm frankly torn. I'm not sure I have an opinion here. My gut says this is the last move cyclically higher. I don't know if we're going to make a new high on 10s, which is 502, 503, something like that. I mean, we're certainly close, 460 and change. But there's a lot of things I think I'm seeing, and you're probably seeing as well, whether it's discretionary or transports, that I wouldn't expect to see if yields were about to really run away from us here. So cyclically and secularly don't always have to align. I prefer when they do, like that's when you can really make money. But when the cyclical and the secular don't align, just kind of step back and wait and be patient. I think so much about this business is being patient, not being clever. Like the clever call right now is, oh, yields are overbought, let's buy some bonds, or yields are oversold, let's sell some bonds. Let's just sit back and be patient here and watch for a little bit.
And doesn't the market just like bonds to just chill out, right? It's not so much up or down as it is just not so really fast. Just wherever you're going, just get there slowly.
I would be, maybe I'm wrong for thinking this, and of course I might be wrong for thinking this. I think if we're sitting here, it's May 30th. If we're sitting here on September 30th and 10s are 390, I'd be worried. Why? Because all these narratives can't be right simultaneously. So, at what level yields does the bond market start to reflect what discretionary or transport or whatever may be hinting at already? So listen, we've shown we can kind of operate with yields somewhere around here. Whether they're 5 or whether they're 470, maybe it matters for a small biotech company that needs the kindness of strangers to exist, right? But if we're talking about, what is the correct cyclical call for the next 12 months, I'm not sure we want yield a lot lower. Doesn't it just begin to reinforce us that, ooh, maybe there's a slowdown on the other side of this? So let's be careful what we wish for.
Can you have leadership out of these natural resource stocks and these commodities going higher with interest rates falling?
So I don't know off the top of my head. I'd have to look at that historically. But what I do think you can say is there are very unsynchronized cycles globally going on right now. Like maybe you would agree, maybe you wouldn't. I think we spent a lot of the last year pretty early cycle. Maybe we're more mid-ish here, starting to trend late domestically. But like I have, China consumer breaking out for staples. I have Hong Kong industrial starting to inflect up. That doesn't look late. That doesn't look particularly mid. That looks pretty early.
Somebody likes China.
I like it. I know I'm going to have to withstand a shakeout here, and I'm trying to get mentally prepared for that because I know that first. I remember. I know you remember as well. The first correction after the 09 low in the S&P was June of 09. It was only down maybe 10, 12. It felt like 40. It felt like 40 because you were so nervous about the market only 2 or 3 months off this apocalyptic type low.
The recency bias was strong then.
And my recency bias in China is quite strong because we're only 3-4 months removed from an apocalyptic type low in January, February.
Chris, I know you'll love this. My father, it was a Sunday night back in February, March, and my father texted me.
Of 09 or of this year?
Of this year. My father texted me, what's up with the Chinese stock market? First of all, my father has never texted me about any stock market, Chinese or otherwise. Number 2, I didn't know my father knew that China had a stock market, yet alone he's asking me about the Chinese stock market. I think the Shanghai's been up every single day since then, which is, you can't make this up. I mean, just classic. Couple of things that you said that I wanted to reiterate to the audience. Number 1, about your sample sizes. Is it about too small or is it about the wrong sample size? One thing I like to, remind myself about backtesting is that when you backtest, you're looking at every single cycle in that backtest except for the current cycle. And the current cycle is really the only one that actually matters and is going to pay any of us. So I like to remind myself of that every time I'm overthinking the past. So I'm glad you mentioned that. Another thing that you mentioned that I think is understated, and it was more in Morgan Housel's more recent book, he mentioned this multiple times, is spending time thinking, right? We're always so busy working and getting to this meeting and getting to that meeting. And maybe it took you shitty Wi-Fi on airplanes to figure out how valuable that time was for you. I think it took Morgan Housel writing a book and telling me for me to realize, yes. And as it turns out, I do that. I just wasn't doing it on purpose. It was kind of like by accident. I was spending a lot of time thinking, and I've actually found that really valuable over the years. So for those of you out there listening, those 2 points that Chris is making, you know, a lot of the stuff about the market, this is great. We could do this all day. But those are 2 points I think underrated, Chris. Underrated. Nice
So
work.
JC, I'm gonna steal something. This is not an original thought. I'm not gonna tell you where it's from. But we have a client whose approach, and very well-known macro investor whose approach is simply imagine, then investigate, then invest. And I think imagine is the first and most important part of that, because you don't know, I don't know, no one on this call knows. We all have a base case, we have a hypothesis. That hypothesis needs refining at every moment, right? Does the hypothesis strengthen or does it weaken? Try to imagine a world that looks very different 6 or 12 months from now. So let me ask you, what would really, really surprise you? It's May 30th. What would really, really surprise you by May 30th of 2025?
What would really surprise me? What would be the most surprising thing? I mean, there's a few things that can surprise me. Maybe gold, this being a historic failed breakout in gold, maybe, and getting back below those 2011 highs. That would be surprising.
So I find it interesting how you answered that, because technicians should always answer that question with the surprise being against the trend, because the trend should never be a surprise.
Yeah.
You should be much more surprised with 4,500 S&P than you would be 6,500 S&P.
So does my answer work? Does that fit?
I think it should work. I do that often with technicians or chartists. I want to know if they're thinking in context of the trends, right? Yeah. And what should surprise you should always be what's against your discipline, right? Because your discipline is trend following, as is mine. I think the other thing I've just found in my career is some of the most money is made in the most persistent trends that people won't acknowledge. Like, what has been a more persistent trend than Japanese banks? Find me anything. Look at Japanese banks relative to tech.
The MUF G, right? The MUF
Look
G.
at I mean, the idea that this doesn't get more press every single day in every broker note on the street is absolutely, you're hearing all my alerts go off as the market opens. I
oh yeah, mine too. Don't worry.
Why do the European banks not get more attention just as well? Why do the Japanese insurance stocks not get more attention? These are the best trends in the world, and they're unacknowledged.
Hold on, before we let you run, I'm glad you brought up Japan. You know, big debate that we were having for a long time, and question that I had was whether or not Nikkei was going to acknowledge those 1989 highs, or if that was just too far away. Can we all agree that the Nikkei has acknowledged those 1989 highs?
I think what we're in the middle of here is a very benign Nikkei consolidation. I don't think we put in 8,300 days of work to get back to the old highs and fail. Maybe we did. I don't know, but I would be surprised. And I don't know whether this little hammer overnight in Nikkei, I don't know if you saw it, is going to be a viable hammer. But like, the Japanese banks made new relative highs overnight. And man, I would be hard pressed not to want to be adding to that here.
Nice little hammer. Nice call out on the candlestick. Last question, Chris. Best favorite country to visit? You do a lot of traveling. You mentioned you spend a lot of time on planes. Favorite country to visit?
Oh, well, I'll tell you, next week, I have a good one next week. London Monday, Paris Wednesday, Milan Thursday. So all three of my favorites right there. So it'll be a good week, seeing a lot of clients, and hopefully sneak some fun in too.
I love it. I absolutely love it. Chris Verrone, I really appreciate you being here. Fan favorite. You've always been I've always been a huge fan of yours. It's great.
Vice versa.
Love this so much.
Thanks, man. Have a good week.
Adios. Safe travels. Chris Verrone, he's the man.
That's quite a trip there.
This is what he does, man. He's always, you know, it's not surprising. You know, Paris and London are right there, so that's easy. Take the train over. You know, it's like going, you know, Connecticut into New York. Right? No big deal.
No big deal.
But anyway, I did want to reiterate something, because I do got to hop. I'm heading over to the beach, guys. You know, something Chris said, so important. I hadn't thought about this ever, and this is something I've been thinking a lot more. I was thinking about it yesterday, as a matter of fact, as I was doing some thinking. I had like 20 minutes of like, my phone died, and I didn't have any meetings, and I was actually able to sit there by myself for 20 minutes. And I was like, that Morgan Housel, that bastard was right again, spot on. That time that you get to think, a lot of us are so busy working. That time thinking is work, right? That we want to build that into our calendar. I know a lot of smart people that leave windows in their calendar throughout the day to do that thinking. Something I've been thinking about a lot. I'm glad that Chris mentioned that. Totally true.
Yeah,
So
and the morning walk is like the best time for me. Everyone's different, but
that's
for
a good
me,
way to do that for sure.
right?
No question. All right, guys, I'm going to the beach. I gotta get my tan game up like Strazza. Look at this guy's tan, dude. I gotta get me up. I gotta get me going. All right, guys. Adios.
Enjoy the beach, I guess.
Well, I love that too from Chris. I just pinged that into the analyst team chat. 70% of your time should be spent thinking. My girlfriend.
That's a lot. That's a lot. That's a lot. 70% a lot.
It's not for all of us. Not for all of us, but someone like him who's talking about markets with clients every day, he's got to have, his thoughts all organized and lined up and ready. I'll just lay on my couch or go for a walk or go for a swim. And that's working, just thinking it through, thinking ideas for reports, thinking talking points, thinking, post ideas, new universes. It's important. So
and then the rub though is to then come back and then follow through on your ideas, right? You can't just let them, because I'm as guilty of anyone. I'm talking to myself here. I think of something great and then it just sits there.
If I'm not thinking enough, you'll know, because I'll be on the show like I don't have anything to say. Right? You can look at a million charts in a day, but then you got to go take a step back. What did it all mean? Kind of thing. So I'm glad that you guys agree with me, Ravi. Hi, Jason. Car alarm going off. Can you hear it? It's obnoxious.
All right.
Let's talk about Uber.
Let's what?
Let's talk about Le Uber.
What happened there?
We put on
There's
a
no
risk.
news.
Yeah, we got to talk about it. We got to talk about this. So let's start with the shopping list, Fonz. Spencer, do you know what we're doing here by now?
Is that a question? Yes.
Yeah, with the shopping list, right?
Yeah.
This is a list of names, people love this one, that are simply
great.
close to their prior cycle highs, right? It's not the strongest stocks in the market. It's not the best performers over any time frame. These are stocks that should be leaders if they're above their old bull market highs from 2021, 2022. Should be an element of leadership there, right? But more importantly, these are clean setups where we know where we're in, we know where we're out, and they're really, really well-defined and actionable right now. Throw up the second Uber chart. Most of them look like this, whether it's CrowdStrike or ASML or Uber. AMD looks similar with a pretty hard shake, right? Checking back here, the scene of the crime. That's 63 in Uber. So let's look at when this trend changed. Go to the next chart. So colorful. Let's talk about what we did here. The moving average, this is the 200-day simple moving average. We keep it so simple here at All Star Charts, right? Because it doesn't need to be that complicated. Now, don't look at this and say, oh, wow, look at that support and resistance at the 200-day. It's not it. It's simply that when the trend is down, like it was with the red moving average and all these red arrows drawn, rally attempts fail. See all these failed rally attempts? They get back up towards the long-term mean and they roll over. Those are all those red arrows. Then what happens? The trend reverses. Take some time, right? By early 2023, the trend had reversed. That 200-day moving average is now green. That means that it's rising. It's color-coded based on the slope, not where price is. And then what happens?
The corrections fail.
Corrective waves fail and end up being just that. Counter trend moves within a broader primary uptrend, right? Right at the 200-day. Check back. Bulls regain control. Now, if you entered on any of this weakness, right? Since the primary trend has reversed, we have 3 circles here now, right? In the primary uptrend phase on the right-hand side of the chart. The last, or the 2 before today's, or the current one, right, resulted in a 65% rally off of, I guess those were the Q2 lows, 65% rally in 3 months.
Is that good? It sounds good.
It's great, right? And then, and this is big stock too. And then at the October lows, a 100% rally in 4 months. I'm not saying we're going to go 100% the next quarter, but I do think bulls will regain control of this trend. The primary trend will reassert itself. Go to the next one. We'll end up calling this just another non-top, right? Or another failed top. Show the failed top chart. What do you think, Spencer? We got an AVWAP there coming in. This is a critical AVWAP. It's from the October correction lows from last year, right? Coming right in where the 200-day is, around 63. A little shake below it. Maybe now we're going. Yesterday's action was interesting. And I've been looking at this one. I've been thinking about this one. We've been talking about it. We talked about the portfolio accelerator, right? A lot of Uber from me lately. I finally put on a risk reversal yesterday. I'll tell you why.
Yeah.
Broad weakness in the market yesterday. Did you notice that?
Oh, it's hard not to.
Everything was red. So the bears definitely would take control of a chart like this and blast it below those prior cycle highs in a tape like yesterday's, right?
But
this would be easy pickings for the bears. Couldn't do it. Bullish engulfing candle on the Uber yesterday. Are we following through higher today? We're 10 minutes into the session, but it looks okay. You know, we're flat on the day. They couldn't knock it down yesterday. Instead, we engulfed the prior 2 days trading at this key level. So what I do? I sold July, went out to July, I think July 21st, the July monthlies. I sold 62.50 puts. I used that to finance 2 72.50 calls with the same expiration and collected a nice little credit at the same time. That's it.
For July, you said?
That was the trade yesterday. Yeah. I can tell you exactly which ones.
You don't have to.
Yeah, July 19 was the expiration. So 51 days. Ended up with like a 65-cent credit.
What I like about this chart is it kind of shows the convergence of a lot of things happening at the same time, right? You're at the prior cycle high, which is acting as some kind of support, or at least in theory. You have the VWAPs right there. Maybe RSI at the bottom starting to turn back up, right?
Yeah, nice little bull Momo divergence.
Yeah.
You're right, Spencer. There's a nice confluence of evidence here suggesting that this could be a lovely entry. So we'll see. We're going to keep it real.
You're talking me into it here. I don't have an Uber, but you're talking me into it.
Listen, this is not. You're gonna get hurt a little bit if this one breaks down below those prior cycle highs. Sure. You cover your puts, right? Probably get out of your calls for, not much. You lose some money, but if this works for us, oh baby. Calls are fully financed, getting paid to make money.
But that's what's great though. That's what's great about this is there's such an obvious out. Like I love trades that have an obvious out. It's okay to lose money.
Yeah.
If you have an obvious out.
You're not going to take a crazy loss, right?
Right.
You'll take a loss. And it's tight. It's really tight here. So what are we trading at, like 64 today? So $1.50 lower, you want to be out. Done.
That is tight.
So hey, we'll see. I really, really loved the action from this one yesterday. That was the Bears' moment. They should have took it down. It's been sitting right there, right? The Bears have lost momentum. So I think, boy, Uber from here. And you don't need it to do. So I dropped an AVWAP from the year-to-date highs also. That comes right in at about 72.50. Those calls will be paying. If we make a quick move back to test that AVWAP from the year-to-date highs, get rid of one there. At least for a double, for sure. Probably a lot more than a double. Free ride. Puts will be worthless. Let's go, baby.
This is a good one. I like this. You want to talk to Sean?
Yeah, I want to see if he likes it.
I think Sean gave you I thought I saw Sean in the chat yesterday giving you permission, but let's see.
I think he likes the AMD too.
When did Strazza turn into me?
Hey, where'd he go?
You
There
did
it is.
this to me, Sean. This is all your fault. I never used to sell premium. I wasn't a premium selling man. I'm just so
Well, I like what you did in Uber yesterday. We talked about it offline, and you know, when the market was getting a little slippery yesterday, it did feel like a good time to sell some puts. And I like the way it dug in, and it continues to dig in here. And look, I'm biased. I'm also in Uber. I'm in a different trade than you. I'm in a much shorter term trade. I bought some June 70 calls last week. Not working so far, but we'll see. We could both win in this trade.
Now, would you ever, so I was thinking about this yesterday, let's just talk about it on here. Sell the puts on a different day than you buy the calls? Like would that?
Nothing wrong with that. Nothing wrong with that at all. Generally, I don't do that. You guys know I like to keep my life simple. And so a lot of times I like to keep my expirations lined up together. But I mean, here's the difficulty with that, right? Not that it's wrong, but if you're selling, like say, puts that expire in 1 month to buy calls that expire 2 months out, then you're generally not going to get as much premium for those puts that you need to cover the cost of the calls. And when I do risk reversals, I like to have a net credit from day one, right? If you flip that, if you sell puts that have 3 months to expire and buy calls that have 1 month to expire, yeah, you're going to get more credit. And maybe that means you could buy calls that are closer to at the money, which have a higher chance of probability. But then you're mostly, I mean, really that trade is really, you're just short naked puts with a short-term kicker on the call side. So they're not exactly the same trade is what I'm trying to say. Nothing wrong with that. Nothing wrong with that.
Yeah. And then when you kind of work your orders and you're doing a risk reversal, the way my platform does it is it wants it all to be filled at the same time and just tell you what your credit is. Why not work one and then work the other? Like, do you know what I'm talking about?
I totally know what you're talking about. As a general rule, I don't like to leg. What you're talking about is legging into a spread, buying one leg or entering one and then doing the other. As a general rule, I do not like to do that. But in this case, if I were to do it, Strazza, I would buy the calls first.
Okay.
And then sell the puts.
And why in that order?
Because the calls have a defined risk, right? You're not, you can get into them and if a thing goes to zero, fine. And if they do go to zero quickly, which unlikely, that means you're going to get a lot more for those puts you're trying to sell. But generally speaking, I don't like legging into spreads, especially if there's a fast moving market, because what ends up happening is, look, 9 times out of 10, it's no big deal. No big deal at all, right? You're going to get your fills and there's going to be no wild story, no drama, right? But even in those 9 times out of 10, when you're doing that, I feel, at least in my experience, Strazza, when I try to leg in, it takes a lot of work, a lot of time. And eventually when I get filled, I didn't really improve my price all that much net, right? It was just like a lot of effort for very little reward.
Right. Okay.
So I generally don't do it. Nothing wrong with that if you're smart and you get the long leg on first. But yeah, it's something I don't advise people to do that. I just think it's just a lot of energy for very little reward.
Yeah. Yeah. You could spend a lot of time just trying to work these orders, pain in the ass.
Yeah.
All right, great. So Sean loves it. Sean loves the risky.
Sean approves. We need like a Sean stamp of approval thing. I don't know what that looks like.
I mean, look, I like it. It's not a classic situation where I would put a risk reversal on, because there's not that much premium in the puts compared to, what we've seen in Uber, recently. But I like it because you've got a very clear, I mean, you're leaning on the same level of support that I'm leaning on for my trade. We're expressing our trades differently, but we both can see that there's a clear level of support that we need that to hold. And if it doesn't hold, we're out, right?
We should be out soon with such a small loss.
Exactly. Now, look, if Uber has a Salesforce moment over the next few days, which I don't think it will, doesn't have earnings coming up, you're going to get hurt a lot more than I am. That's the risk that you're taking.
Mm-hmm. Yeah, a candle like Salesforce today, that wouldn't be good. That wouldn't be good.
Right.
But
Now-
so intentionally, the 51 days before the expiration of these is before the next earnings report. And your
Right.
calls are long before the next earnings report.
Yeah, mine expire in about 3 weeks. So, in fact, maybe this is a good time to talk about it because we're coming into the end of the month, and I've got some positions on not just in Uber, but in a few others that have June expiration options, the regular June monthly expiration options. And one of my best practices at this time of every month is when the calendar turns to the first of the month. So when we get to June 1st, then I like to review all my positions that have expirations in that month. And it's time to take some action. If they're out of the money, which these Uber calls that I currently have are, then I'm getting out because time is my enemy now. We're getting into the rapid acceleration of theta decay when you get inside those 2 to 3 weeks until expiration. And if I'm holding long out of the money calls, I'm gonna whatever premium is left, it's gonna be gone quickly. So June 1st, I'm pulling the plug on any out of the money positions I have that expire in June. On the flip side, if I got positions that are in the money and conceivably working at that point, then I'm going to start trailing an aggressive stop below my position. I want to allow it to keep working, right? If it's working, I want it to keep going. I want to give it as much room as it can, but I'm going to aggressively start trailing. I use discretion here. It's not an algorithm. But generally speaking, I want to have my trailing stop at the 3 to 5 day low, 3 to 5 days previous low. Anything, if it gets below that, I want out because that's the short-term trend has reversed on me. And when I'm running out of time, you got to have a tight leash. How's that?
I like it.
Is that helpful?
It is helpful. Theta decay. Nobody likes it. So AMD, talk to me about this advanced micro.
I like AMD. In fact, that's a trade I am considering for today. I haven't actually looked at the chart today. Yeah, I mean, it's right kind of where it was.
It's the same setup as Uber, no?
Similar, yeah. Different. Obviously, it's a different sector, different industry. I mean, you gotta like what Nvidia is doing, right? I mean, is that a signal that there's more strength coming in semis? I don't know, but in AMD, I like, and we talked about doing a risk reversal in this one, and I like it. It's got a little bit more premium in those puts. Could probably sell the 145s, maybe the 150s if we want to be aggressive, and certainly 150 would be my stop right here. I think I'd probably go out 3-4 months if I can. I haven't looked too deeply into this trade yet, Strazza, but this is definitely on my to-do list today. One of the trades I want to put on, or I want to look at something here.
I'm interested too. 150. I don't know. That's my problem with this one at this point, right? Where do you put the stop? Because you don't want to put it all the way at those May lows. That's like 25.
You feel like that's too far?
Yeah.
Well, depends, right? If I'm going to do a longer term trade, right? If I'm going to do like a 9 to 12 month out expiration,
then you can
so that's more of a longer pull. Then yeah, I'm comfortable doing a 145 stop. But if we're going to do something shorter term, then 150, maybe even 155.
Yeah, I think you can keep it even tighter than 150. Yep. All right.
Yeah.
Well, let me know. I'll get involved with you.
Yeah, it's on my to-do list, my friend. Probably next hour I'll start piecing it together. Got some other stuff going on.
I see that Nutanix, Brian Harris. Yeah, we don't want it here. We don't want it here.
But hey, at least it stopped at like a logical support level, right? 50, whatever, 55.
What? Just the lows from like last month?
Yeah.
Or April? Yeah.
Well, what's that? 60? I don't know. Somewhere around there. 58.
That is an ugly post earnings reaction. Wow.
There right now.
You want this thing to hold those pivot lows. This is going to be a nasty weekly candle. All right. Yeah. So this is now a on strength only setup in something like this, where you could use those highs around 62.
Yeah. If you're buying this thing here, man, I mean, that's a hero trade, right? You're trying to be a hero.
Let it settle.
Not for me.
Settle and recover a little bit. What else we got? Sean's baby thinking about crypto these days.
My baby?
What's your baby think about crypto?
Listen, I'm not the crypto expert here by any means, but love the action in Bitcoin, the way it's been consolidating over the last, 3, 4, 5 weeks now. I mean, we keep holding that 65,000 level, I believe is the number. I don't have the chart in front of me. But as someone who's do I dare say I'm a hodler, a hodler, HODLer?
Hey, there's no shame in that.
Okay. Well, as someone who I guess identifies as that, I love this action. I think the next big move is higher.
Sean's pronoun is hodler.
There's no shame.
I reserve the right to be wrong, but look, I don't have. I'm severely under invested in crypto, so it's not like if crypto goes to zero, my life's going to change. But I am involved, and I would love to see it higher.
Look, these crypto equities, MicroStrategy, Coinbase looks creepy good right here, above the VWAP. It's kind of hanging out while Bitcoin's consolidating. This one, when Coinbase makes a leg higher, it's not like Uber. We're not talking 100%, 200%.
I mean, look, I think we all agree that the next major leg higher in crypto, whenever it comes, Coinbase has to rip, right? I mean, because it's the dominant. I mean, maybe I'm wrong. Correct me if I'm wrong, but it feels like Coinbase is the dominant player, at least for U.S. investors, right?
Yeah. Yes. 100%. There's Coinbase and there's everybody else.
Right. So I just have a hard time thinking that thing does not participate. Big time.
Absolutely. And I like it too, because as the crypto bull moves forward, you would think, just like we're seeing in the stock market, participation is not so thin, in the later innings as it has been in the earlier innings. It's been just like Bitcoin and a handful of other things, Pepe the Frog, whatever. But breadth is terrible in crypto. As all these other altcoins start working and participation broadens and everybody's trading all these crazy coins on Coinbase, you probably don't want to be in the stuff that's linked just to Bitcoin, like MicroStrategy and the Bitcoin miners. You want something that's going to share in the gains for the whole broader crypto world. And that's Coinbase. They're going to be collecting fees on all these trades. So
right. We have that big $100,000 level hanging over the head of Bitcoin. It could possibly be the most watched price level of all time, right? And when we get there, when we get to 100,000, I mean, it's going to be front page news on every newspaper, on every broadcast. Everyone's going to be talking about it. I mean, how does just the whole space not explode at that point, right? And Coinbase is going to rip with it.
If you don't own it at that point, how do you not run out and buy some?
Right. Right.
Yeah.
But it's not just the Coinbase and like the crypto broker dealer space. It's the entire broker dealer space, right? Steve, your old favorite interactive brokers just can't stop going down or up. Can't stop going up. It can't go down.
Dude, that chart's just been crazy.
It can't go down.
But you're right. Great point. Fair point. Right. It's capital markets and broker dealers and exchanges. All these guys are just doing just so well right now.
Strazza, I'm looking at the CME chart right here, consolidating since October. If they get Bitcoin options going on CME, I mean, come on, that's going to be a bigger deal than zero DTE options for CME, I think.
I totally agree. And then what's the deal with SIBO?
Well, yeah, that's right. They're different stocks, aren't they? Different equities.
Who would list them?
That's a good question. I don't know. I mean, CME's got the futures, right? They've got the futures for Bitcoin. I mean, CME will likely offer options on futures, right? But that's a good question. I don't know. Maybe we should. That deserves some more research.
All right, we'll talk to Louis about this one. He might have an idea.
Yeah.
I don't dabble.
Whoever's going to get the Bitcoin options, they're going to benefit big time. It's going to be one of those two.
And it'll be the same thing. And then it'll be, okay, then they're going to get Ethereum options and they're going to get Solana options, right? So it's just going to build from there. But yeah, capital markets look so good at the index level. It's KCE. You could go look through the components in that fund. There's a lot of great names, like Spencer said. Interactive Brokers is one of the best, but they're all kind of working. So look at the chart of Robinhood. Robinhood looks so good still. Starting to fill that gap today. So,
Spencer, I got some recess. Let's go to recess, buddy.
Hit it.
My recess is market related.
Okay. All right, you want me to go first? So I'm excited, very excited. Me and all of our mutual friend, Kenny Glick,
Oh yeah.
booked our tickets to go see the Dead & Company at the Sphere on July 4th. Happy 4th of July. Happy Independence Day. We're going to be celebrating it in Vegas at the Sphere with the Dead & Company. I'm very excited. I booked my tickets yesterday. I can't wait. I'm so excited.
I'm very happy for you. The Sphere looks amazing. You're gonna have so much fun. And you're not sitting with Mr. Kenny Glick though.
No, we're not sitting together, unfortunately, but we'll both be there in close approximation, and we'll probably hang out beforehand, and it's going to be great.
And tickets were a lot more reasonable than I would have guessed. Right?
Yes. They still weren't cheap, but we, I feel like we paid a fair price.
Yeah.
That's going to be a good show on
I
July
can't wait.
4th, no less.
I wish I could join.
July 4th.
I wish I could join you.
I talked to Strazza about it yesterday. Strazza's like, I can't go to Vegas. I don't belong in Vegas.
Not for me.
That's fun. That's fun. My recess real fast is there are now single stock ETFs that you can buy that invest in other single stock ETFs, but they generate income. So through the beauty of either weekly options or zero DT, I'm not sure.
Calls, right?
What?
They're just selling calls.
Yes, exactly.
Trading strategy.
Yeah, they're selling calls on other single stock ETFs.
John, is this dangerous?
I mean, look, when you start getting into derivatives of derivatives of derivatives, you're asking for trouble.
Yeah, it's the answer is yes. Sounds dangerous. Sounds terrible. It sounds retarded. No, okay.
Hey,
Yeah, who needs these products?
Hey, if there's a market for it, all right.
I mean, look, yeah, I agree. I agree with you, Spencer. If there's a market for it, then by all means, provide it. But I'd be curious to know who wants these products, who's trading these products. I'd be very curious to know.
I mean,
Well, there's going to be 25 of them. Granite shares filed for 25 of them.
so they have like all the big stocks now have this, and who is the fund manager?
Granite shares.
Who?
Granite shares. They do a lot of commodity stuff.
All right.
I thought for sure you were going to say Wisdom Tree
No.
I thought it was going to be Roundhill.
or Roundhill. I'm sorry, that's the one I was thinking of. Yeah, Roundhill.
Hey, Wisdom Tree is going to be on the show tomorrow.
Yeah, Jeremy's on the show tomorrow.
Jeremy Schwartz.
Awesome.
Yeah. Steve, you got anything?
No recess for me. No.
Okay. All right. Well, it is Thursday, which means we got the options jam session with Sean at noon. Chart request live at 1 o'clock with Strazza and myself for the next few shows, as Pat is off gallivanting in Sri Lanka.
And we got Gordon at 2 o'clock.
That's right. That's just a recording.
Yeah.
Yep. All right. That's what we got. Thanks for watching. Thanks to Chris Verrone. Smash the like. Check out all of our links in the description. Free research and otherwise. Go make some money. That's all I got.
See ya.
I can't take no love.